Hello everybody, it's Decentralized Dave, and look at me using gloves. At the start of April, gloves, this is how cold it's out here. And when you look at the markets, they're even colder. It's a nice parallel between the weathers, and I was actually making videos inspired by this parallel. At the end of January this year, Bitcoin was 105,000, Ethereum was 3,300 at that time. And I was making a video near the lake. It was very, very warm weather, and I was making a video titled "Crypto: The Winds of Change." I was basically talking about how everything is going to change in crypto. And 2 months and a week forward in time today, well, look out. Look at the crypto markets and markets in general. But let's talk about my exposures. This is the part of the FaceTime, basically my track record series. And I'm supposed to be talking about my track record, what I'm doing, what I'm saying, what I'm buying. Bottom line, I'm still majority cash, but I have used a bit of the cash to come back to buy back into markets. The title of the video says that I am not happy about selling my MicroStrategy puts. I did sell them on Friday, and I did sell them because when you see a massive red daily candle as S&P 500 did on Friday last week, that's not the time when you hold the puts. That's the time when you want to sell the puts. That was my plan. That's what I wanted to do. What I didn't account for was that Bitcoin will hold that day. And so therefore, MicroStrategy also held that day, even though stocks crashed. MicroStrategy didn't. So I think I missed on multiples on that. It was a small position. I had 1% of portfolio in the MicroStrategy puts, but it would have been really nice to make multiples during such a times like this. And I was the only, or one of the very few guys who were able to, because I had a very strong case for crypto collapsing now in April. I made a video about it again. For 50 of you that are there, it's so shocking. So it would have been nice, but okay, it happened, the puts are gone. Okay, I'm not gonna be buying them back now, no. Also, I bought some Tesla on Friday. Again, I did so because I saw S&P just crashing too much. Even though Tesla did not, was still over 240. I was buying over 240. So my average buys for Tesla is basically between 240 and 250, somewhere there. Because I bought first Tesla like 2 weeks ago as well. But Tesla was oversold. Was the most oversold MAG7. So because of February and March. So Tesla basically did its crash already, most of it already. So there is a silver lining, even though when I was checking today where Tesla wants to open, yeah, I'm gonna be feeling some pain. Yeah, I bought a little too soon maybe. But again, okay, I have 15% in portfolio in Tesla, and I have like 15% of cash more ready, dry firepower ready for more Tesla below 200. That was also my original target, but I didn't believe in that target at the end of March. I was kind of like, anyway. Also, I did buy shortly a little bit of crypto, Bitcoin only, of course. I'm not gonna go down the reasons why. Down to coin selection, let's not go down there at the very moment. But I did buy a little bit also on Friday when I saw how it held. But I sold it for a small loss, few percent at the end, just before the midnight yesterday, because I saw the weekly close is not going to be as good. Not good at all, actually. Even though it's still surprising. It's still surprising how Bitcoin is holding. Bitcoin is supposed to crash triple. Bitcoin is supposed to go down 3 times as much as S&P 500. And S&P 500, if it opens where it wants to open today, below 5,000, then it's already 20% down, S&P 500. So Bitcoin is supposed to be down 60%. So Bitcoin is supposed to be below 50,000, okay? And it's 75,000. It's still stronger than it was in the past. So I still will be keeping an eye on that. I'm not gonna be talking about the correlation, about hypothesis that Bitcoin should actually correlate with commodities. Bitcoin should not correlate with growth stocks, equities actually anymore. But I'm not gonna be discussing that anymore. I just look at the charts, what they tell me, and they still tell me it's still correlated with the equities. So, but it's stronger. Okay, full stop. And that's about it. I'm still majority cash, but I have less cash than I had, a little bit. And what I'm witnessing in the S&P 500 is exceeding my bearish expectations from the equities. Of course, it's shocker. Basically, it's just now it's the proof how much the funds have been on margin, long on margin. After the two back-to-back 20% years, everybody was so spoiled, and just this cascade we're having. That's all the margin calls.